Hey guys, David Robinson here. Welcome to the Apartment Investing Journey. As usual, we've got another great episode for you today. I'm really excited to have Seth Bradley with me today. Seth, welcome to the show. Appreciate you coming on.
David, thanks for having me on, brother.
My pleasure. So, Seth is a real estate entrepreneur and an expert at creating passive income while working as a highly paid, busy professional. He's closed billions of dollars in real estate transactions as a real estate attorney, investor, and broker. He's the managing partner of Law Capital Partners, a private equity firm focused on value-add real estate acquisitions and development. He's a former big law attorney, most recently practicing in real estate and securities department of a top three globally ranked law firm. He's also the host of the Passive Income Attorney podcast, great podcast. I've listened to a bunch of episodes myself, where he educates attorneys and other professionals on how to stop trading their time for money so that they can practice when they want to, not because they have to. So, Seth, just a very brief bio there. Our podcast is all about the journey. We'd love to hear about your backstory and then how you progressed into the space and what your business looks like today. So if you can, let's back up and tell us where it all started for you.
Yeah, for sure, man. I'll take it way back. I was born in
Sure.
Korea, and I was adopted by a couple of folks in Crossroads, West Virginia. So grew up kind of in the middle of nowhere in the country. People wouldn't think that when they see me. I don't think I come off that way, but but
Yeah, cool.
grew up in West Virginia, blue collar background. Mom is a retired school teacher. My dad is a retired coal miner. So came from kind of that hard work, put your head down, trade your time for money type of mentality, which is it's a double-edged sword, right? You learn that work ethic, which is great, but on the other hand, you don't really have that abundance mentality. Everything's always scarce. You're always trading, time for money. And I was never really around kind of entrepreneurship or owning real estate or anything like that. So growing up, it was all just about, get a great education, get the best job you can possibly get. And for me growing up, I identified being a doctor as the best W-2 job you could get. So, went down that pathway, went to med school for about a year and then into my second year before I realized that I hated it. I mean, I knew that that's just not what I wanted to do. So I dropped out in my second year, took some time there, didn't know what I was going to do. So I went ahead and started getting my MBA at the time, just because I knew that would apply to just about anything. And then I started thinking, what's the next best job I could get? And for me, that was to become an attorney. So I went to law school after that, did pretty well there, went to, did the whole, did really well in school, ranked high in my class and got a big law job out of law school, did well there. And then, I still just had that itch, right? I didn't know what it was, but there was just something. And that itch was just the entrepreneurship kind of, be your own boss, stop trading your time for money type of mentality that I just didn't grow up with. I wasn't exposed to it. But, the more I got into, when I was getting my MBA and even in law school and also working at a firm, seeing some of the clients that are coming in and owning these massive real estate properties, I started surrounding myself with more people that had that mentality, and it just kind of started getting the wheels turning a little bit. So that's when I started looking at, what is there out there? And for me, it was real estate. So, I started in single family, house hacked into a duplex was my first property back in 2013 and started investing in single families, fix and flips, all that kind of stuff. And just kind of worked my way up. And eventually, that's where I am today, into large commercial properties.
Love it. So I've got a few friends that are attorneys, and I have a chance to chat with them, quite often. And it's a challenge, right? Because you get into that legal world, and you're making great W-2 income, and it's a double-edged sword where you're making great income, but it's hard to exit that space. You figured out a way to sort of navigate it along the path, and I'm curious today what your business looks like. Do you spend? I guess if you can, just describe for us. I mean, you got your hands in a handful of things, but describe to us what all your businesses look like and your involvement from a professional standpoint.
Sure. And maybe I'll take you, the rest of the journey there is kind of,
Yeah, please.
doing the single family stuff, the fix and flips, doing all that. And honestly, when you're working in big law and you're billing 2,000, 3,000 hours a year, you don't have time to do fix and flips. You just don't. But at the time, that's all I knew. I only knew single family rentals, single family investments. I didn't know about, passive investing in commercial real estate or even active investing. I didn't have that mindset yet that you could actually do that. And I had a couple of epiphanies while I was working and meeting those clients and just seeing that they're regular guys like you and me and realizing, well, hey, you don't have to have $100 million to buy an apartment complex. You can use other people's money. And then I started kind of getting into that space, started networking with the right people. You know how that process goes. And I was advised to invest passively first. That would be before you jumped into it actively. Even being an attorney that's done those types of deals before, said, hey, maybe you should do it passively first. So I did. So I started investing passively in some multifamily deals. Got comfortable with that, and that's when I started saying, okay, now I think I'm ready. I can cross over to the active side. Started, just vetting deals and raising capital, and using my legal expertise to get my foot in the door. And that's kind of how my business developed now with Law Capital Partners. It's a private equity firm. We do commercial real estate, mostly multifamily, into RV parks now as well. But again, I partner with, I'm primarily doing the legal work, kind of serving as an in-house counsel on the team. So, having somebody on your side that's part of the ownership group that's an attorney is never a bad thing, right? So either I'll do some of the real estate and the securities work myself, or I'll just oversee the work with the real estate attorney, the securities attorney that's on the deal, and just kind of put a second set of eyes on it. And then, when there's little things that come in, like the vendor agreements, the contractor disputes, things like that, you normally have to outsource to a third party attorney. I'm already there to handle those things, and you don't have to have somebody bill some hours for that.
Yeah, love it. So how do you manage? So are you still part of another firm? You mentioned being a part of a big three firm. Are you still working sort of in that corporate legal space as well?
Right now, yes,
Okay.
but very, very little time. I mean, I'm billing like less than 5 hours a week at this point.
Oh, gotcha.
It's
Okay.
really like nothing. Yeah.
Okay. Yeah, I was just curious how you manage from a time perspective, your investment business, your legal business, and then anything else that you're involved in. I know that you have some other businesses that you own, and I assume manage at a high level. But yeah, I was just curious from a time management perspective how you've been able to navigate that.
Oh, for sure. And that's what I was saying. You have no business working in big law and then trying to flip houses. I mean, even the same thing goes for just about anything when you're working in big law. I mean, we used to have this thing called the 20-minute rule. When a client or a partner, anybody with any sort of importance emails you, you have 20 minutes to respond in some way, shape, or form. So that means basically you're tied to your desk, you're tied to your phone. You can't, have any, and even during the lunch or whatever, you have to respond. So it's a very demanding job. You can't do all the stuff while doing that, at least not
Mm-hmm.
until you get to high up, where maybe you're just a rainmaker and you just have to maintain relationships and things like that. So yes, I don't have a full-time practice, not even close to it at this point. It's all really focused on the real estate business.
Got it. Got it. Love it. Well, let's talk a little bit about your entry into this space. You started by investing passively, and then you moved to the active side. Let's talk a little bit about that transition to the active side of the business. How'd you get involved in your first opportunity, and what did that look like?
Sure. I mean, just networking, right? And then it was actually a group that I had invested passively with before. And they knew that even before I said yes to investing passively, I said, hey, are there going to be some opportunities for me to kind of get a peek behind the curtain? Because ultimately I do want to be on the active side. And that was kind of one of the prerequisites for me to invest passively, was somebody saying, yeah, we'll show you a few things, like, come to the meeting, like things like that. So that was kind of a prerequisite, and that's kind of how I got my foot in the door. And like a lot of people, you just get piecemeal things. They've already done their underwriting on the property, but they'll send you the spreadsheet and be like, hey, take a look, see what you think, and you do your own little underwriting, things like that. Do your own due diligence. Obviously, I put my legal expertise eyes on it as well, and kind of give them some feedback on the documents and what the attorneys on the deal have produced, and then raising capital and other things you can bring to the deal.
Got it. And so you've got a great podcast yourself, the Passive Income Attorney. So talk to us a little bit about, as you have an opportunity to educate and work with high income earning busy professionals, particularly in the law world. What are the biggest challenges that attorneys face in getting involved in real estate deals, as you have an opportunity to work with them?
Yeah, I mean, the biggest challenge I think is time, right? They don't have any time. You don't have time to do this stuff. You don't have time to learn a completely new business. Even if you're somebody like myself that was in a real estate department or a real estate attorney or a securities attorney, and you're around this stuff all day, you still don't have time to learn the actual business of it. You're going to have to carve out some time if you want to be on the active side to learn it. But to me, if you're already making, 200, 300, 400, $500,000 a year or more, if you're a partner, you're making $1 million, whatever you're making, you're obviously really good at what you do and you're making awesome active income. There's no point in you trying to do this other thing on the side. I mean, take some of that, figure out how to save some of that. Don't get tied down by the golden handcuffs and use some of that active income and turn it into passive income. Invest in these passive deals. And you can use your legal expertise to vet the deals and kind of do your due diligence and all that stuff and be an intelligent investor. But the challenge is time. You don't have that time, and maybe you don't have the desire either to take on another business, because at the end of the day, when you're billing all those hours, and you're spending all that time at the office, then you're coming home and you've got family things to deal with. There's just not a lot of time left for you in your day.
Yeah, absolutely. And so, you being an attorney, and you're looking at operating agreements and PPMs all day long. Um, you obviously have some insight into some things that investors should know, passive investors should know about their operating agreements. Let's dive into that real quick. Talk to us about maybe a few things that passive investors should be looking for in their operating agreements that maybe sometimes get glossed over or would have a significant impact on the outcome that they're seeking.
Yeah, I mean, first of all, I think that passive investors, at least when they first get started, they don't even realize that, they look at the marketing materials, they look at the offering memorandum, all the stuff that's kind of jazzed up and looks pretty. And that's kind of what they pay attention to. And then even with the offering memorandum, you just flip straight to the projected returns and look at that and then compare that to the next deal, which is, that's a whole different subject matter, comparing a deal to a deal with projected returns.
Sure.
But what a lot of people don't realize, at least the people that invest, maybe in their first or second deal, or don't do quite as much due diligence as it should, is that the operating agreement is the most important document. I mean, it's more important than the PPM, even though it's an exhibit to the PPM sometimes. The operating agreement is the actual legal document that is going to lay out your rights as a member of that company or as a limited partner or as an investor. And those are the words that you need to dig into and really figure out what they mean. And a few things that you can look into that are really important are, the two terrible words you never want to say: a capital call, right? You want to look and see what happens if there's a capital call. Do your membership interests get diluted? And they probably do. But one thing you really need to look at: find out where that is in the operating agreement, understand it, figure out when the manager of that agreement or manager of that company can do a capital call. What does it take? Does it take a super majority? Because can the manager just do it on, with their sole and absolute discretion? Figure out like when that capital call would be triggered. I mean, that's one, because capital calls are one of the worst case scenarios that you don't want to encounter, but they do happen from time to time. So you should know going into the deal when they can happen and how they can happen. Another thing is, distributions. Again, you kind of see in the marketing materials, you're going to get, these projected returns, and, you're going to get quarterly distributions and all these different things, but you really need to find that section in the operating agreement, read it, and make sure that that matches what the sponsor, the operator, is telling you. Because sometimes, they're just willy-nilly and they're just on a, they're on a webinar and they're just talking and talking and talking, and they just kind of gloss over things, which is not advisable. But make sure you dig in the operating agreement, make sure you know when you're going to get your distributions, make sure you know what you're going to get. And, and related to that is kind of the waterfall, where how those things are, how they go down the waterfall and when you're going to get paid, because it's really important to understand that. And some of the language in the operating agreement gets really complicated with respect to the waterfall. So, if you have a friend that might be a real estate attorney or, a securities attorney, maybe have them take a quick look over that to make sure you understand when you're going to get paid and who gets paid first. And the other thing relatedly is fees. Make sure that the fees that they lay out in the offering memorandum match what they say in the operating agreement. Make sure you know what fees are being collected for what and when they're triggered, as well as liquidity. I think that's something that hopefully everybody realizes that these investments aren't liquid. You're in it for the long haul. You're in it for that minimum of 2 to 3 years if you want out quick, if you can sell it quick, but you might be in it for 10 years. Who knows? And typically the operators have the discretion to do that, to hold the property as long as they see fit. So just make sure that you understand that this investment is not liquid, but find that in the operating agreement, find where it says that, and make sure what your rights are with respect to that. So if an emergency comes up and you want to sell your shares for some reason, know your rights, know if there's a right of first refusal, perhaps to the management, the sponsors, maybe a right of first refusal to the other members. Just understand, like, if you have to get out, how can you possibly get out? So you can understand that, because emergencies do come up. And the last thing I would point out is voting rights. Just know what you have the right to vote for. And typically the one you really want to look out for is, how can you get rid of that manager, the manager of the LLC? If they're doing a terrible job, if they've committed fraud, if there's misrepresentations, if they've done something terrible, they should be able to get replaced under certain circumstances. So just make sure that those are laid out correctly, and just know your rights, again, with respect to the operating agreement, because again, those are the words that if something goes wrong, you're going to have to go back and see what your rights are.
Yeah, that's a great checklist of sort of some high-level key components of that operating agreement that are important. So if you're listening, just to review, capital calls, how are those handled? When can they happen? How are they structured? Distributions, including the waterfall. At a very high level, those are going to be identified in the investment summary, but really to dig into exactly how those, and they can get complicated, so digging into exactly how those are structured. The fees that the sponsorship group or the general partners are taking on the deal, liquidity, and just understanding that these aren't, quick turn deals. You can't just easily get your money back out, and what would it take to get your money back out? And then lastly, the voting rights. So love that summary. That's excellent. I want to shift gears a little bit. I want to talk about, you started investing in single family, right? And you made a big jump into commercial real estate. You alluded to the fact that, hey, doing fix and flip as an attorney just isn't realistic, but you probably could have gone the route of, buying single family and, hiring managers, hiring contractors, or, even working through turnkey, providers where you're buying, single family in the Midwest where they basically handle everything. Why was it that you decided to go large commercial multifamily versus staying in that space that you had started in?
Yeah, well, I mean, I like to add value. So even when I was doing single family stuff, you're looking for value add, and that typically is going to include some construction and dealing with different vendors, contractors and engineers and architects. Not so much, but more so the contractors, right? And then you end up getting property managers to take care of your property as well. When you upgrade to commercial properties, you don't have to deal with those low level contractors, those guys that will screw you over for $2,000, right?
Mm-hmm.
Because the people in commercial are worried about their reputation. They want to get the next job. They want to scale their business because they're legitimate business folks, compared to the contractor that you're trying to do you buy a $50,000 house in Cleveland, and then you're trying to flip it for $150,000, and you put $50,000 rehab in it. That those contractors that do those deals, they're a pain in the ass, to be honest with you. And when you're trying to do that from 2,000 miles away, like I did, because I live in San Diego and I was fixing and flipping in Charlotte and Cleveland, it's ridiculously hard to try to manage what they're doing when they'll screw you over for a couple $1,000. So, not just that. So the vendor quality is a big thing. And the other thing is just scaling, right? I think a lot of people that get into single family, they start building a portfolio, and they get to a certain point where they're just like, man, this is just a lot of work for a couple $100 net that you get per door. And there's got to be a better way. And that's usually more doors under one roof. So you end up scaling up to multifamily, and not that you can't use other people's money for single family, because people do it all the time. They partner and go deal to deal, but man, it's a lot easier to scale, especially using other people's money in commercial real estate.
Yeah. So moving forward, what does this look like for you? You got your hands in a handful of things, but what do you see on the horizon for your business moving forward in the next maybe couple of years?
Yeah, just continue to strategically partner with choice operators that I like working with, partnering with them on their deals. Bringing my investors to their deals. That's part of the service of being someone like myself that has a pool of investors is to vet those sponsors that are going to, because I'm not usually that sponsor that's boots on the ground. I'm partnering with people that are. So part of my job is to make sure that those operators, they have the track record of success, they have the experience, and that I know them on a personal level where I trust them. And to that extent, I trust them with my investors' money.
Yeah, love it. Well, I want to start winding down here. I've got a few final questions for you. The first is, what's the biggest challenge you're facing right now in your business that we could all learn from?
Yeah, I mean, I think it's scale. I think trying to scale, trying to delegate, trying to figure out when to bring more people on. I'm working crazy hours right now, right? But it's not terrible. It's not like when I'm billing hours at a firm, because when you're doing that, you're working for somebody else, and if you work 12, 14-hour days, you are just completely miserable. When you're doing it for yourself, it's a little bit different. It makes you feel alive to a certain extent, but got to figure out a better way to scale, and that usually means bringing on more people. So I'm working on that right now.
Yeah, love it. What's something that you're just absolutely crushing right now in your business that we could all learn from?
I think it's partnerships. I'm really good at networking and figuring out getting close to people. So figuring out what their business is and what they need. I just went to IIREC in LA. It's Hunter Thompson's networking or his event, and just had a really good time there. So networking and partnering with different folks, and there's just a lot of opportunities right now out there. So I'm trying to figure out which ones are the best ones for my investors and my partners.
Yeah, love it. Well, look, Seth, I've enjoyed having you on the show. I've enjoyed hearing about your story and progress into the space, how you've been able to manage, the legal world, as well as getting involved in larger commercial multifamily deals, and how you've taken part in that, and some of the insights that you had as far as, high level things that passive investors should be looking for in the operating agreement, which, as you alluded to, probably the most important document for you to be looking at when you're vetting a deal, as it's going to dictate how that agreement between you and the general partners sort of plays out. Just appreciate you coming on and sharing your journey with us. What's the best way for our listeners to connect with you and learn more about what you have going on in the future?
Sure. I go check out the podcast, go to passiveincomeattorney.com. That's probably the best way, because all the episodes, all the content, the blog, all that sort of stuff is housed at that website. So that's the best place to get started.
Awesome. We'll have a link to that in the show notes. So if you're listening right now, go down to the show notes, click on that link to the passiveincomeattorney.com, and connect with Seth, listen to his podcast, listen to the content that he produces, a lot of good stuff. Again, Seth, thank you for coming on. Thanks for sharing your journey with us, and I look forward to connecting with you again soon.
David, appreciate it, man. Talk soon.